Hello everybody and welcome to the weekend update. Hope everybody's having a good weekend. Why don't we dig right in this. So everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made here are my own personal opinions, and all trading and investment decisions are your own and done at your own risk. Okay, now that we got that out of the way, let's see what we've got coming up this week. All right, so tomorrow is 4th of July. Happy 4th of July to all my American friends. U.S. markets are closed tomorrow, of course. So on Tuesday, we have a pretty light day on the calendar. Factory orders, that won't get too much attention. However, on Wednesday, we have the release of the minutes from the June FOMC meeting. These things are always closely watched. Investors and fund managers and institutions watch or read these closely and try and see if they can decipher what the Fed is going to do next. See how worried they are about inflation, if they're going to raise or talking about raising next time at 75 basis points or did they talk about raising 100 basis points? Is that on the table, off the table? So a lot of information, or potentially a lot of information in there, and potentially market moving event, that one. On Thursday, we have the ADP, which is a commercial entity, the ADP non-farm employment change, and that gives us a little bit of a hint about Friday's non-farm payroll numbers and the unemployment rate. So these numbers on Friday are, I'd kind of give this a tie for importance with the FOMC meeting minutes. Non-farm payrolls are always really important and almost always move markets unless they come in totally in line. Not a ton of stuff this week, but a couple of really important things going on this week. Let's see what we got for earnings, and we have practically nothing for earnings. Isn't really anything that I'm going to pay much attention to. I mean, maybe Levi's, but I guess that could give us a little bit of a hint about how the consumer's feeling. But yeah, this is an extremely light week for earnings, so won't be paying much attention to anything there. All right, so let's take a look at the market. We'll look at some the major indices, of course, some important commodities, the setups. While we're looking at the sectors, there are a couple of nice setups along the way. Nothing outstanding, but some stuff that could turn out to be pretty good. So we'll take a look at some individual stocks as well as we go through all of this. But as always, we're going to start with the S&P 500. So let's dig right into that and see what's happened. Where are we? What do we think might happen? So this is we're looking at a chart of the SPY, which is the ETF that represents the S&P 500. We're still firmly in a downtrend, but have come off nicely off the lows. Now, last week we were talking about the rally we had just had. Now that's stalled out on Monday. We did gap up a little after this big day, and then pulled back a little bit. I remember mentioning last week, I thought we had another day. I was worried about this this gap overhead acting as resistance, and sure enough it did. Because on Tuesday, we gapped up a little bit, went a little higher, and then pulled right back, and then it had this big, ugly red candle. But I want you to notice and I noticed this during the day on Tuesday. The volume was very light. Look at some of these other red candles. Look at the big red candle there, or these big gap down days. Look how much volume was done on those days. Look at this big red candle here. Similar sized red candle, and off a top as well. Look how much volume was done there. And now look at the volume here on this great big red candle. Not very much volume there, and less volume for the most part, or the same, that we had done on the way up. So to me, that was kind of bullish. I wasn't ready to panic here. Some people were starting to panic here, and I'm kind of thinking to myself, no, this is not super bearish yet. And then the following day, we had kind of an indecisive candle, right? Just sort of didn't know where to go, very narrow range on that one. Thursday, though, we gapped down quite a bit, but we reversed nicely. It ended up being a little indecisive. Now, I will actually note on Thursday on the SPY and the QQQs, this is actually a bad print. It started off earlier in the day. This started off as a really bad print. We did get near this high, which kind of filled in the bad part of the print for the most part. But this candle here is still not entirely accurate. But we did have a nice reversal intraday. And on Friday, we continued that reversal and climbed higher. So I want to actually show you the futures contract for the S&P 500 because this is totally accurate. And I want to take a look at these last two candles because this is what we call a tweezer. Now these are nice, fairly tall candles. They're almost exactly the same height, and you can see Friday's candle. Ignore this this red volume candle here. The futures have just opened up, so we're seeing actually this is live action right now. And this final little tiny candle. This green candle right here is Friday, okay? And look at the volume, right? The green candle has a lot more volume than the red candle and also the day before that. So this is, to me, kind of telling. Now, this pattern here, it's called tweezers. And, because I guess it kind of looks like tweezers, right? The important thing is that these candles are about the same height. This one is actually also a bit of a bullish engulfing candle here, right? Because it engulfs all of the body of the candle before it. So this is pretty bullish and would lead us to believe that we are going higher from here. Now, if we do go higher, then we confirm this as a higher low, which is step one on creating an uptrend, which might look something like this. Whoops, that's not really what I wanted to do. Here we go. So yeah, I mean, this is very, very early in this, but this is something we should watch out for. A potential change of trend here. We need to, this is not confirmed as a lower high though, until we get out above this pivot right here. So let's draw that in as well. We need to break this level right here to confirm this as a higher low. And once we do that, we can actually start giving serious thought to, potential short-term uptrend here. So this is what I'm going to be watching this week. Can this continue higher? We'll just go back to the SPY really quick one last time because this we'll be looking for the same sort of action here. We want to break above this pivot, and once we do that, if we can come into this with some momentum and break through here like it's not even there, then we break into this gap, fill this gap. The first spot I'd be worried about is this downtrend line, the 50-day moving average, and then the top of the gap. That probably acts as resistance, and you know what? That's fine. If it rolls over a little bit, we have a little pullback. Maybe we pull back to this pivot and then move back up again. That'd be fine. That'd be fine by me. That would be a nice, healthy beginning of an uptrend. But like I said, this is early. This is speculative. Step one on this process is we've got to get above this high to confirm this as a higher low. All right, so what do we got going on in the Qs? So the NASDAQ, the reversal wasn't quite as strong as it was in the S&P 500, but there's potential if we can move up from here, and we need very similar action as the SPY. This could be the beginning of an uptrend. It's also entirely possible that we just roll right over, and if we do roll over, what happens when we get down to these lows? If we cut through there, do we cut through quickly? Do we capitulate and then start moving up? It's hard to say, but it is a possibility that we should watch out for this week. that we do roll over and come down and test this low again. IWM, the Russell Small Caps, pretty much the same kind of price action going on here. We're wanting to see this go higher and confirm this is a higher low. Don't want to see this roll over. Don't want to test these highs or this low here, because if we do, we probably cut through fairly quickly. I think people will panic a little bit. I know some people want to see people panic. People want to see a bunch of fear come into the market, a washout, and then we go back up. I'd rather have a nice slow U-turn bottom in here. Something that looks a little like this, right? And then we could even put in a little handle here, have a cup and handle. That would make for a really, really nice bottom for a launching pad higher. Yeah, let's have a nice U bottom. We don't have to have a V bottom. We can have a nice, slow, healthy U bottom. All right, what else? The VIX. There was a nice pullback in the VIX on Friday. You could argue here that we had a bit of a bear flag in the VIX. Let me draw that in for you, make this a little clearer. So this would be your bear flag in the VIX right there. If that's going to fulfill its prophecy, looks like it is, right? I mean, we broke down out of that on Friday. Will we break down through this trend line, and will we keep going? And if we do keep going down, I mean, I think this probably, I haven't done the measurement on this, but this probably measures out pretty close to that support of around 20. So where we break out there, yeah, that brings us down to around 21 into this area here. Actually, that should be up there a little bit. There we go. So this kind of goes along with the thesis that we start moving a little higher here. If this really is a bear flag in the VIX. So let's watch for this continuing to break down. The 10-year yield. This has rolled over quite nicely, but on Friday put in a little bit of a hammer candle. And just above support here. So we'll be watching this closely as well, and so will the rest of the market, I'm sure. But it is nice to see this roll over and that it's put in a lower high here. Because, if yields are shooting up, the market's going to have, equities are going to have a hard time going up. With yields coming down, people will be more inclined to buy equities. The dollar index, we got to go over to TradingView for that. So here we are on the dollar index. I think this could be a bit of a fly in the ointment. We're still, firmly in an uptrend. We had a high. If we were to roll over here, that'd be great. I mean, that could make that a potential double top. But there's nothing to say here. It's going to roll over. A couple days worth of selling wicks maybe is a little bit of a sign of weakness. If this does roll over, it would be really nice if it broke support here at around this 103.85 level. With any luck, we roll over and we cut down through here because as long as this is going up, equities are going to have a bit of a tough time. All right, let's move on to gold. Oh, let's get back over here. Oh, actually, before we go to gold, let's take a look at the DCA timing tool. And again, if you remember the Discord, you can download this and add this as an indicator to your own TradingView setup. Just look back a few sessions in the recording sessions, or shoot me a message in one of the channels, and I'll fire you a link to it. But as you can see, on a weekly basis, we're still declining, still firmly in the red zone. The MACD is not really showing any signs of turning up yet. The blue MACD line is still declining. Maybe the decline is slowed a tiny bit, but we're going to need some more up. This is going to need to continue higher for a couple of weeks before this MACD line starts to turn over, and then eventually crosses above the signal line, which is the first step to turning this green, and we can start dollar cost averaging into our index funds again. All right, so back to gold. Okay, so gold on Friday broke down through this strong support, got down as low as this pivot here. We might have to put this level in as a minor support level. Right now I think I'll just put that in there as a pivot level. But yeah, tagged that previous low and then bounced from there and got back into its range. You know, I'm not hopeful that that gold goes much higher here. It's just this action in gold is just kind of surprising considering how afraid everybody is of inflation, and you know that this is continuing down like this is actually maybe telling us that some of the inflation fear is getting worked out of the market. The gold miners did not have an especially good week. They did have a good Friday. This is a big, strong reversal candle, but they had 3 really bad days leading into that. So be interesting to see what happens with the gold miners. And silver had a really bad week. You know, a bit of a waterfall here. A slight bit of a reversal candle on Friday, and you can see that with the futures have just opened and where we've gapped up a little bit, but they don't seem to be doing much so far. Copper has not been doing well either. It had a really bad day on Friday, broke down out of this bear flag. You know, this action in copper is not good, and this is not especially good for the economy, or this is reflective of you know, perhaps a recession coming, that the economy may not be as healthy as it has been. Speaking of recession, I think that we're going to hear a lot more talk over the next few weeks of recession. Towards the end of the month, we get preliminary GDP number for the second quarter. The first quarter, if you don't remember, showed negative GDP. So there was contraction in GDP for the first quarter. And when we have 2 quarters of negative GDP, we're officially in a recession. And it's looking like the consensus seems to be that, yes, the second quarter is going to show negative GDP as well, which would mean that we're officially in a recession. I think a lot of this is already priced into the market because, you know, we're hearing a lot of chatter and the market's not falling apart. So we still got, you know, 3 weeks to go, or just over 3 weeks to go until we get to see this number. But leading up into there, I think we're going to see a lot of talk about it. And, you know, we will probably see as if the media, you know, gets people a lot more fearful about this, we probably will see some down days in the market because of it. But I think that, you know, the market, you've got to remember that the market is forward looking. The market is looking out about 6 months. And 6 months from now, the recession could be well over. So and usually the market bottoms well before the economy bottoms. So this is something we need to be aware of if we're going to let the media scare us, you know, about recession. We've got to be aware that the market bottoms well before the economy does. The market is forward looking, and that we have maybe priced in a good chunk of you know, of what a recession may do to you know, to some of our favorite companies. That being said, you know, we've got earnings season is going to be starting up in a couple of weeks, and we may hear about bad guidance and more recession talk there. So everything's still a little bit up in the air, but these are things just to be aware of. All right, so on the screen right now we have the DBC, the General Commodity Tracking ETF. And you can see that has not done well over the last few days. It broke down. I mean, you could call this a bit of a bear flag here, and it broke down out of that. You know, we've got 2 days of the same low here, so there's potential for a bounce there. But I wouldn't hold my breath on it. DBA is the Agricultural Commodities ETF, and that one is had a really horrible couple of weeks, and pretty bad towards the end of the week as well. It's coming to the support level at 20, but there's no signs of momentum slowing as it came in there. You can see volume's pretty heavy. I think this has got another day, at least another down day in it, probably down to this next support level at 1953. Maybe it takes a couple days to get there. Maybe momentum starts to slow as it comes into that level. But this is agricultural commodities is not somewhere I'd like to be right now. But, we could watch for a bit of a turn in this. Speaking of turns, crude might be making a turn. I thought that, so this here you could call a little bit of a bear flag. I thought that when this started to roll over that it would come down even farther and maybe even come down to this 95 level. But then on Friday we had this green day, which was quite interesting. And we'll see as we get a little farther into some of the subsectors in the energy and some energy companies that there's some interesting stuff going in here. And we could be seeing a turn up. So there's a chance it's time to take a look at our energy plays again and maybe add back into them, because I trimmed heavily on these. I trimmed some back up here. I trimmed some on, I think this was Tuesday. I trimmed a lot on Tuesday morning. Because on Tuesday morning, we went up a little bit and then we started to roll over. And we went green to red, and as soon as we went green to red, I was like, this isn't going to be good, because I was expecting a bit of a rollover. So yeah, this is interesting and worth watching closely here in crude oil and also in the energy space overall. So let's take a look at XLE. XLE, we've got a bit of a hammer candle here. Put in a little bit of a support level here, right where you would expect it. So this is interesting, and again, worth watching, right? XOP, the oil producers, oil exploration and production ETF, very similar action as XLE. Bit of a double bottom perhaps, and right at the 200-day moving average. Very, very early yet though, right? We need to see another day or two of this moving up to know for sure that maybe a bottom or a short-term bottom is in this. But if you're really aggressive, you want to be keeping a close eye on this. Same with oil services. Oil services has put in a nice looking hammer candle here. Now it's still a red candle, but it is a fairly decent looking hammer candle. Volume's a little light though, so we've got to take all of this with a bit of a grain of salt. But there may be something going on. Let's take a look at one of the oil companies, ExxonMobil. It put in a nice reversal candle. Right near its support, a little bit of a 2-day bottom there and nice reversal. Not quite a tweezers. It's not, it's close, but not quite there. Wouldn't be surprised to see this going higher. And some of the other, most of the other oil companies look similar to this as well, so we won't look at them all. Schlumberger is an oil services company. Again, nice looking hammer candle. Light volume though, so the volume's a bit of a warning sign in this, but definitely want to be paying attention to this if we want to play in this space. And Halliburton's another oil services company, and it has a half decent looking hammer candle there. So if you play this, you could maybe buy a breakout of Friday's high or Thursday's high, and then you've got a stop just below this pivot low here. Is how you play that, and I think there's fairly decent risk reward in that. But I kind of want to see more proof out of this yet. It's still a little early for my liking. XLY, consumer discretionaries, looking bottomish here. Nice green candle on Friday after a couple of sort of indecision days. Looks a little like the major indices. Need to see this keep moving higher, but this is looking a bit like a bit of a rounding bottom here, right? Where's my little? There we go. We can easily draw that kind of rounding bottom in there. So let's see where that goes on consumer discretionary. Industrials. Somewhat similar action. We had a bit of a double bottom here. We rallied off of that, pulled back, and now we're potentially putting in a higher low. We've got to, just like the indices, we've got to go out and we've got to get above this this pivot high here, to confirm this as a higher low. But so far, this is looking good. I like the look of this for a move higher. And good volume too here. Look at these red candles, okay, on this pullback. Very light volume. Look at these green candles. Nice, good volume, rising volume as we move up with these green candles. This is good price and volume action here. We've got volume confirming that this wants to go higher. One of the companies in the industrial space that looks all right. Jerry pointed this out to me. We've looked at this before as well. And we've been looking at this for a potential breakout. So it's broken out of that this sort of lower support line, broke out of there on Thursday, continued higher on Friday, and now we're coming into this double top. Does this have enough momentum to keep on going? Do we want it to keep going, or do we want to see it, put in a tight consolidation for a couple of days and then break out? I think it really depends what the market's doing. If the market's having a good day on Tuesday, and the market's got some momentum, well, this should just keep going. This doesn't need to stop here. This can keep going and break out above this resistance level. So this could be interesting to watch. I'm not thrilled about the risk reward from here though. I think there's a lot of risk in this, and it's. I think in the long term, this probably does go quite a bit higher if this breaks out. But I think you've got to take a lot of risk on this. You almost have to risk to below this trend line, I think. At the very least, you have to risk below this support level here. So this one's kind of not for me, but it could be interesting, especially if you want to get into the industrial space and the aerospace and defense sector. Financials. So you can see financials. We talked about this. We talked about that big last weekend. We talked about this big green candle here and how bullish that was. And then the following day, kind of did a lot of sort of very similar to what the market did, where it gapped up and then it pulled back, and then the next day it kind of it gapped up and then it pulled back, rolled over a bit. But on Thursday, you can see we put in a reversal candle, and then we had the continuation candle on Friday. So we've got a nice little series of higher lows here, which is the very beginnings of a bit of an uptrend. But same deal with everything else. I've been talking about this a lot. We got to get above this pivot high so that we can confirm this higher low. Worth watching though. Technology. So the large cap tech has been doing reasonably well, and we'll take a look at the FAANGs in a second. But we had that nice rally, and then of course we had the pullback earlier in the week, and then some indecisive candles, and the reversal candle here on Friday, not anywhere near as strong as some of the other sectors, but it is still there. There's reason to believe that this will turn and go higher. We've got to see follow through on Tuesday on this one though. And the communications sector. Again, little weak coming off of this turn, weaker than some of the other sectors, but it's still there. Got to break out above there. We need to see continuation on Tuesday. Apple, we'll look at some of the FAANGs now. Apple, a potential higher low. This looks better than the technology sector itself, so that's good. Want to see continuation on Monday, or on Tuesday. And we got to watch out for, we got a bit of a trend line going here, so that could be a little bit of a resistance right in here. So it'd be nice to see it just blast through that, I think. Let's take a look at Amazon. Amazon is this is pretty interesting here. Lovers of Amazon might want to think about this might be the time to add to this. So last week I had pointed out all these lows in the same area at about this 102 level. some people are going to call this a head and shoulders. We're not in an uptrend. So this would be, if this is a head and shoulders, we'd actually see this as a continuation pattern. It would be bearish. But I'm actually not bearish on this. This support level here has held and held and held. It really makes me believe that somebody is holding this up. Somebody with a lot of money is holding this up. They do not want to see this go below 100. And it may be Amazon itself buying their stock back, which is something I should look into. So anyway, on Thursday, we had this nice reversal candle here. So, Thursday we gapped down a little bit after a few rough days. We gapped down and we reversed strongly, and then we followed through on Friday. And we reversed right in that same level where we've seen all of these other reversals. I think it's going to be tough for it to get through this level. So if you're looking for a spot to buy Amazon, I mean, I think anytime if it gets back down in here again, I don't know, maybe a little sketch, but I think that just getting in here now, because I think this is going to go out and get through this 50-day moving average and probably get above this high and confirm finally this higher low. So this is going to be very interesting to watch. And if this can start making higher lows and higher highs, then I think the rest of the market will probably follow it. Netflix is still lagging behind, looking a little rough, but definitely putting in a bottom here. This sideways consolidation is healthy for this after this massive move down. This probably needs to go sideways for a few more months before it can really start to turn back up again. I don't think it's going any lower. Unless the market completely falls apart, unless there's some sort of capitulation in the market, then this might dip down and then go right back up again. But notice we're kind of moving sideways. We're making a lot of lows in the same sort of area, a little similar to Amazon in that respect, but the RSI is continuing higher. So this really suggests that this is stopped going down and will eventually move its way up. But I think it's going to take some time before it actually start moving up. Sideways is just fine for this for now. Google's not doing as well as some of the others. This just looks disappointing to me. But we do have, it couldn't make the higher high here, right? And it's come back down, and if we turn now, then it's made, a slightly higher low, as long as we can get out above there. But I guess, it's consolidating here. It's just a messy consolidation. So I'm not sure what to read into that with Google. Tesla. Same sort of thing with Tesla, right? It's a bit of a messy consolidation. Maybe there's, maybe we're making, drawing a little bit of a pennant or triangle in here, perhaps. There is definitely a bit of a pennant here, and this would be a great big bear flag if that's the case, right? And we would expect to see that break out to the downside. I don't even want to measure that. The measurement on that is atrocious. That takes you down into probably a couple hundred if we were to measure this as a bear flag. So definitely watch that. Watch for a breakout of either that uptrend line or that downtrend line, because there could be quite a strong move, whether that's to the downside or the upside. But right now, this looks very indecisive. And I don't want anything to do with that at the moment. I suppose we should look at Meta. Wonder if they fixed this chart yet. Nope, this chart is still a mess. This chart got all messed up when they changed their ticker. All right, so we'll just look at the part of this that's okay. So yeah, you can see we're still in a downtrend, not looking healthy. The only healthy thing about this is that it bounced off of that pivot. It's about the only good thing I've got to say about this Meta chart. Let's get that pivot drawn in there. But you know, even so, it's a bit of a weak bounce. This really needs to get going, or I think it's going lower. Okay, what else we got? Oh, let's look at semiconductors. So semiconductors had this this consolidation going on here, a little bit of a gap overhead, and they had a very bad week, and they had a bad Friday. Now, if you remember, on Thursday, we'll look at Micron in one section. We'll look at Micron right now. Just sort of keep this in mind, right? We have this consolidation. We broke out the downside of this. A tiny bit of a reversal on Friday there, but this is a very weak candle, and it's got, you know, volume on that candle as well. So that's not ideal. However, if we look at Micron, who sort of kicked that off. Now, Micron had earnings. It was after hours on Thursday. They got beat down quite badly in the after hours. In fact, let's take a look at an intraday chart so that we can take a look at that. We'll go to a 5-minute here. Okay, so you can see when right here is where earnings came out. You know, they popped up. The algos got that one wrong, and then it sort of declined. But in the pre-market on Friday morning, started to move up nicely. And then some news came out from in around here. News came out from Taiwan Semiconductor, TSM. And they essentially guided down. So you can see TSN went down on Micron's earnings. But then we're fine. They were going sideways, but then TSM released their own bad news on Friday morning. And then this is what took the whole semiconductor sector down. You know, the semis were down a little bit on the Micron earnings, but not that bad until TSM came out, you know, and then they all went down. However, we'll go back to Micron here. You can see intraday on Friday, Micron just blasted right back up and got back, you know, a big chunk of what it had lost. Come on. Big chunk of what it had lost on that earnings release, right? I mean, it got basically back up to near the close on Thursday. So we'll go back over to the daily here. So the point I'm trying to make here is we've got this beautiful reversal candle. That's a hammer candle with a bunch of volume, really good volume on this. Micron is certainly reversing here, and there could definitely be a play on Micron, but you've just got to be aware that the space, you know, the whole space itself is weak. But you know, Micron's a good company. It's got good fundamentals. It just had earnings. So I think all of the bad news for this company is in. And, you know, I don't want to say this is the bottom, but, you know, this is looking like a really good reversal. And so if you like this company, this may be a good place to add to your position or maybe even start a position. But do your own due diligence. This is not investment advice. You've got to do some research on this company. And you kind of need to, you know, like that semiconductor space. I kind of like what you're seeing, what we're seeing here, and even the RSI is the tiniest little bit of a divergence right there. You know, we had a big low here, and this low on this RSI is definitely a little higher than it was over here. So yeah, there are signs that this is on its way up. But again, there's going to be a lot of resistance overhead. We've got to, you know, first get up to this gap and then get in it and start, you know, closing off these gaps and getting through a number of resistance levels here. But this to me looks low risk. You know, get in this and put a stop just below the low of that wick right there. That's fairly low risk for the potential gain of this. I mean, because once this gets going, should be reasonably easy up to 66. maybe even 75-ish. So yeah, kind of like that one. And one of the other semis we were looking at, one of the semis that has been outperforming, and this company is a little different than your regular chip stocks. It's not really exactly the same kind of company, but it is in the semiconductor space. This had this nice bull flag here. Tried to break out of it on Thursday. I was talking about this week. Can't remember if I mentioned this in the video last weekend, but I know I was talking about this in the Discord this week. Broke out and then pulled back in here. So this is a little scary. Don't like to see these bull flags break out and then the following day pull right back in, because often they fall right through the other side of this. So there is potential downside on this. However, if this turns back up again, this could get really interesting. So I'm going to keep my eye on this still. But right now I'm glad I didn't play it this breakout on Thursday. All right, XLV healthcare. We have a nice bull flag in healthcare. We're going to start seeing a lot of bull flags now. A lot of bull flags in the healthcare and biotech space. And some others that we'll look at, and some individual stocks that we're going to be looking at. But you can see this nice bull flag here forming right here. It looks ready to break out. Might break out on Tuesday. So we'll see if that can continue higher, get through these resistance levels. It targets way up here, which is a little sketchy in this kind of market. But it's. I wouldn't play the ETF itself. I'd be looking for something in this space to play instead. And one of those stocks could be this Boston Scientific. This one also has a bull flag. You can see that we've got a bit of a sideways consolidation, or a bit of a you can draw this two ways. You can draw this as a sideways consolidation. You can draw this as a more traditional bull flag. Either way, once we break out above this level, we're going to be targeting up in this 41 level. So that's only about 10%. It's not a huge move, but if we can make 10% off of this with fairly low risk, so we've got a $3 move ahead of us, and we need to risk about $1, or just below this this flag, which is about $1. So that's a 3-1. That's not bad. And if it does get going, you can move your stop up fairly quickly. You can move your stop up pretty quick to about halfway in there, maybe say just below 37.50. And if it continues to move, just follow it along with the stop so you can lock in some profit. So yeah, that's one that's interesting. I suggest taking a look at that healthcare space, especially if either this one breaks out or the ETF breaks out. Look for other companies in that space that are maybe setting up like this. There might be some good plays there. Biotech, looking fairly similar. We've got a nice bull flag there. Remember when we highlighted the double bottom here and the little hammer and this big volume day here? We got the nice move up. We've taken a little bit of a break, pulled back a little bit, and this little pullback has drawn a really nice looking bull flag. This bull flag targets right to 95, where we also have some resistance in that area. I like it when you've got a clear resistance level and then you measure out a chart pattern and it takes you into that resistance level. It makes people hopeful that it'll get into that level, and they'll just keep buying it up until you start getting to near that level. So this is obviously ready to go. It's already kind of going on Friday. If we see continuation on Tuesday, off to the races on biotech. So this one, safer way to play this is with the ETF, but it's probably lower return. There are companies in this space that have similar looking setups. NTLA, Intella Therapeutics, is one of them, and you can see that it's trying to break out of this this bull flag. This one does have a fair bit of resistance overhead, so we got to be careful that this doesn't just fail on us. But if it does get through here and gets through this 56-ish level, it really could get going. because that should be fairly strong resistance. If we break fairly strong resistance, we should be able to get quite a move out of it. Another one, FATE. I'm not sure if this is Fatty Therapeutics or Fate Therapeutics. Nice looking bull flag. Measures out again, very similar to that XBI ETF. Measures out to a resistance level on the chart. Really nice risk reward on this. If from the breakout here, if you're getting in this at about 26, you're looking at a move of 40 to 42. That's $14 to $16. And so if you're in at 26, you're risking, down to 24. You're risking $2 to make, 14. I like the risk reward on this one. So I'll be watching this really closely on Tuesday. All right, let's move back into some sectors here. We're moving into our defensive sectors now. We've got XLRE. This is the REITs. And that's made a nice move, threatening to confirm this higher low here. Staples have been had a pretty strong week. Didn't pull back as much as a lot of things, and almost out making that higher high that confirms this higher low. Looking very nice here in the defensives, and maybe this is how this bear market is going to end. Maybe people start buying into the defensive stocks first, and start running those up. It seems that that's what we're looking at right now. Utilities, really strong bounce. I mean, here's a nice V bottom in these utilities. This is weird action in these. Very volatile. In something that's usually not very volatile, but we do. This is what we've got, right? And we've got this nice V bottom. We had a 2-day consolidation, and we've moved up again. So a lot of strength here. I just don't know how you get in this now. Let's look at the home builders, because we're seeing a bit of bullish action in here. We had a really ugly move down here. Almost capitulation, really. You can see the increasing volume here, lots of big gappy red candles. We had a nice bounce, we pulled back, and we're having a fairly strong reversal so far in this, but we are coming into some resistance. But if the home builders can get going here, this is actually fairly hopeful for the whole market. And there's a couple of stocks in here. Rather than playing any of the home builders themselves, I think there are a couple of interesting plays in this, and these are companies that have really good fundamentals. You want to do your own research on these, but these, there's a couple of potential investments in here, or maybe sort of medium-term investments. These two companies are suppliers to the home building industry. Okay, so they, not really Home Depot. Not this company is similar to Home Depot in a way, but they supply contractors. They supply the home builders themselves. They don't do retail. You can see that they've had a nice bounce, moving strongly. They've got good momentum here with good volume. Coming in, some minor resistance here right now, but this looks like it could continue higher. So this one is Builder's First Choice, BLDR. The one I like even better than this is Louisiana Pacific, LPX. These guys make OSB, oriented strand board, and they are pivoting into siding for homes. Siding is something that you've got to replace on your house every 30 or 40 years or something. You've got to rip all the siding off and replace it, and so it's a good market to be in, and there's not a lot of people in that market. They don't have a lot of competitors there. Fundamentals look fantastic. The only thing, the big red flag on this one, and I've only done some quick research on this, but analysts are expecting decreasing sales next year. So the declining revenue for next year, but everything else in this company looks great. They've got tons of money. All their ratios are fantastic. The returns are great. This is something that somebody in the Discord, hopefully who's better at fundamentals than I am, maybe does some serious work on this one, because I think there could be something here for a long-term hold. If we look at, let's actually move a little farther back in time. We got to watch out because, we are well above even the pre-COVID levels. We have had a pullback and into support, but we really need to bounce here. So there is a fair bit of risk in this. If this $50 level breaks, this could really come down quickly. And I certainly wouldn't want to be holding this. If I did invest in this, I would bail if it broke 50, and then look for another time to get in, because I think there's a good chance if it breaks 50, it moves down into your next stop. I think is 40, but you may see mid 30s to low 30s if that breaks down out of there. However, that being said, this is kind of, we've got a bear flag that moves the wrong direction. When a bear flag is sloping down like that, they usually break out to the upside. Okay, so, and that's exactly what we're seeing. So this is interesting, I think worthy of some research. And that's about all I've got for you. So, like I said, hopefully everybody's enjoying their weekend. Hopefully everybody has a good 4th of July, and we'll see you all on Tuesday. Thanks.